Hey guys and gals, this is Blake Morrow. You are listening to the daily roundup. I don't know what I was thinking about that. You're listening to the Morning Edge. I was actually just looking at this Canadian yen here. Big rejections up at these levels. Now remember, with crude's actually showing a bit of a reversal here. So, I'm starting to look at the dollar Canadian for a move back down towards, this probably 88, 87 and change level. So just, just some, hold on really quick. Just give me a second. Yeah, just thinking we might get, might start looking for a move down at these levels, especially with crude as weak as it is. Now, crude's showing a bit of a reversal, and I think that that's going to start weighing on the market this morning. So now, remember, we still have about 15 minutes before equities open. But I think that we've got to start being kind of careful here. So let's get through the analysis this morning. Let's get through these charts, and we're gonna get to it. All right. So let's start off with, well, since we're talking about the Canadian, let's talk about the dollar Canadian right now. Dollar Canadian's holding up fairly well. We're getting close to I would think major resistance. This is that big trend line that comes in around 124.50 today, 124.45. I'll just call it, I'm just going to call this high right here key. So basically it's 124. Sorry, let me just move the microphone. Sorry guys. 124.50. It is still bullish, by the way. You guys know I'm still very much a bull here, but you know what? Because of the rejection from last week, I think we have to get a bullish above 124.50. I'm gonna leave. I'm gonna actually flip this back over to range. I'm sorry, for now, but we break above that and then we're gone. Okay, support obviously is 123, and that's key. Really, it's 123's got to hold. It's 123.10, but you guys know that if we break below that, then it turns instantly bearish. That's just the way we need to be thinking about this right now. Okay. Let's go over to the euro. So the euro is trading pretty heavy. Definitely the ZEW numbers are not helping out. So let's pay attention to this 161% extension of this low to high. The reason why we should be paying attention to that, I know it's right here, but it's really below this trend line. So if we click this trend line right here in this blue trend line, you can see that comes in at 117. Let's call it 117.75. But I'd rather, because what could happen here is you break in, you test that support, you even go down towards 117.60. Everybody starts to think it's breaking down, but in essence, it's just hitting the 161% extension. So before you get too carried away with, the support, let's just call it 117.65, and let's give that a couple asterisks, right? I am still bearish the euro. And while we're below almost like today's highs, but really this resistance zone that comes in at 119, let's just call it 119.10. This is bearish. Okay, you guys with me thus far? Good. Cable. Kind of big overnight reversal here. We're getting close to support, intraday support. So let's go over to an hourly. You can see below here, 138.30. Then we're going to start, trading back down here towards 137.50. So I'm going to write down 138.30. It's hourly support, but really this 127% extension is key. So that's 137.30. So 137.30. Still bearish. And now, hold on really quick. Let's take this. Let me see something here. Well, that's it. 139. I mean, while we're below 139, we have to stay bearish. That's it. 139. It's a 618 retracement right there. Boom. I wasn't even looking at it either. Wow, what a big rejection. Aussie. As long as we're below the 76 cent level, you have to stay bearish. I know we got this big rally, but as I was trying to explain on the F.A.C.E webinar, like these are perfect days for reversals in the Aussie and the Kiwi. You got everybody overnight, super hawkish, right? Super hawkish. RBNZ might be tapering. The RBA is. Everybody gets bullish. All the shorts get squeezed. The stock market goes tits up today because you know, sentiment is too bullish. We're up against too much resistance. Reverses, then everybody that got bullish, the Aussie, they got squeezed. They have to turn around and get short again, right? That's really, I mean, really the Aussie set up for a massive reversal if stocks come down. And I'm giving you the if. It's not, it's going to happen. It's just if. Let's figure out where support is here for the Aussie, just really quick. Low, high, 618, right around those lows. So that's going to be, let's just call it 75 cents. That should offer some support today. And like I said, while we're below 76 cents, you have to stay bearish. I know we've had a big bounce. I know that. I get it. Same with the Kiwi, huge bounce. If you guys get the, you know, if you guys just read the update, look, these are the previous lows right here from January, March, boom, right? So the 50% retracing, you can see this 50% retracement comes right around the support zone right here. See that? Right through here. So that's 71.20. I mean, this is all resistance, 71 cents, 71.20. I still have to say the Kiwi is held up a lot better than the Aussie, and it shows. I mean, it really does. But I think we're knocking our head up against big resistance. Support's going to be back down here at 71, this right here. 71.30 or 70.35. That should offer support on the way back down. We're going to keep it in range. Dollar Swiss, or I'm sorry, we did the Canadian. Dollar Swiss still holding up well. It's bullish, right? We just have to break this. We break 92.75 and that thing's going to take off. 92.75. Come on. There we go. Support 91.60. All right. US dollar, Norwegian krona up against really key resistance here. 867, obviously 871. So I'm going to write down two levels. 867, 871. That's key. It is still in range, but man, it's pretty well bid up. If crude stays weak, this thing's going to break out. Today, support now is at 855. Any dip to right here is going to be very well supported. So that's like 854. I know we overshot it today, but you'll find buyers down there again. Dollar Mexican peso, huge support on Friday. We're going to write down 1970, resistance 2010. We're going to keep that range bound. Dollar yen. So this is that was a big false breakout from Friday. That's huge. So now any move back up here to this 1115 level, it's going to find resistance. And we can't put that in bullish anymore, or I don't think we had it in bullish, but this is all false breakout. So now big support. Let me remove that. So if we break this support, we should head immediately to 110. So this is 110.40. So I'll do 110.40, right? You guys see what I did there? Just false breakout, right? You guys got that? Here's the low at 110 or 110.40. There's the high. Break below 110.40, the support right here. Like we cleared, whoops, shit, sorry. I don't want that to, there we go. We break that, then the 127% extension comes right into play. That comes in at 110.05. Obviously, you just round that out to 110, period. Big false breakout. And that's, you should pay attention to that, obviously, with the dollar yen, but really it's all these other yen pairs. Like, I just put in a short for the New Zealand yen, right? This morning. I mean, underside of this massive trend line, Gartley pattern that you got to be on the short side of these things right at these levels. Anyway, okay, going back to where am I at? Where was I? Dollar index. As Steve pointed out earlier, he goes, yeah, it looks like a flag. It does. I agree. So that makes this 618, not this one. That makes this 618 really important. That's 91.97. So let's just call it 92. So while we're above 92, we are bullish. Resistance. 92.70, really the big resistance is here, 92.85, but I'm going to put 92.72. We get above that, and then, there's a really strong chance we break out. Okay. I don't know if that's going to happen today. I think it depends more on equities right now, but I mean, look, equities are bidding at the moment. S&Ps. So next resistance for the S&P, 161% extension of this may move lower. Hold on really quick. Let me stop what I'm doing. I mean, yeah, I guess that's it. All right, so resistance right now is 43.75. That's the 161% extension of this May move or March move lower. May, I said March. 43.80. That was 43.75, but I'm mistaken. Let me make sure of that. High, low. Yeah, 43.80 is good. Okay. 43.80. It's pretty key resistance. Obviously, we're bullish. And we're, whoa. That's a big one. Hold on really quick. I'm monitoring this. Ooh, we're gapping down. If emerging markets close below this, you have to be long dollar max. Did you guys hear what I just said? Give me a 10-4 if you heard what I said. Okay, you guys here. Okay, so this is a big one. This is the EEM. Been monitoring this. Let's go ahead and put it up against the dollar Mexican peso. Forex. This is one of those that, yeah, we get a breakdown here. This should put the dollar Mexican peso back up here, right? That's what should happen. So if this EEM breaks down, just dollar max is along down here. I know it, and one of the reasons why it's been so heavy is, you know, the Banxico from last week, but yeah, I don't know, man. Watch EM today. Okay, sorry, back to where I was at. Let's see, where was I? Tony says 10-4, good buddy. Dollar Mexican buy if closed below. Yes. Okay, so S&P. Let's go back to S&P 500 support. I mean, I know it's 4260 is a light years away, so this 4300 will be big again on the way down. I mean, it's so far away, seems like. But with me going on vacation, guess what's within reach? Pretty much everything. I mean, I'm telling you guys, I know it's been a long time since we've seen that, you know, like Blake leaves and the market gets crazy. But under normal circumstances, for those people like Rick R in our chat room, or Ron Callum when he pops in, you know, you haven't seen him in a while, but, you know, because I know he's, you know, been spending a lot of time with his grandkids and stuff, or Ziggy that's around, pops his head in every once in a while. You talk to people that have been around me for the last 10, 15 years. They know, man. And Rick is in the chat room saying, we're all waiting for you to go. It's like, I know it's been kind of an extraordinary market. It's obviously been extraordinary because, and even Steve, how long have you been, you know, listening to me even before, well, he might not be on right now, but
I am.
Oh, you are. So remember back during the Morning Edge days back, you know, when I was with the Wise Trade Group and MB Trading and all that?
Of course I do.
Yeah. I mean, remember the days, I don't know if you remember when I would leave. I mean, I would leave for like a weekend, or I would leave like on a Wednesday. I would leave on a Wednesday just for a day. And that whatever day I was gone, the market would implode like 2% while I was gone. And then it bounced back as soon as I got back.
Yeah, and unfortunately, the markets stopped being volatile altogether.
I know. But, you know, it's coming, guys. I'm you know, and I know I've been saying this all year, you know, that dude, it's going to come, and it's going to, we will get back to two-way markets. I mean, obviously we'll be at much more elevated levels. You know, the S&P, we might be at, you know, we might get two-way markets between here and, let's just call it like this. I'm just going to be very vague here. And, you know, like we might be in two-way markets like this for like a few years, you know, rally past 4,500, dip down to 3,000, you know, but rip back up. I mean, I really feel that we're going to be doing that over the course of years, because these gains that you see now, we're robbing our future generations of gains right now. So just I believe we're going to spend the next 5 to 10 years just flip-flopping around, you know, these big levels. And that's good because that'll give us as traders a lot of opportunity. It's bad for investors of the next decade, I think. But, you know, anyway, I'm talking really like, I'm just saying volatility is coming back. It'll come back. It will. It will.
Looking forward to it.
We all are. We all are. I mean, you know. Okay, let's back to the charts. I'll finish up here. Gold, silver, Bitcoin. So I'm actually surprised gold's back at 1,800. I was surprised we rallied back, but let's figure out where resistance is here, because we have the 200-day moving average coming up, but we had the false breakdown at 1750 that allowed for a squeeze back above 1800. So let's figure out where this resistance is now. So high here to low. Let me get rid of this previous fib. I moved that for now. Okay. So we're at a 38% retracement right now. And that might satisfy just good enough for continuation if we can hold. So I'm going to write down 1815 and then 1835, two resistance levels. 1815, 1835. I'm going to take us off the bearish designation for now, right? Support today will be 1800, then 1755. So I'm going to write down both of those. So, or 1750, right? 1800. Let me just make sure of that. Yeah, 1750. All right, silver. So we made it back above this 2650 resistance that we had talked about previously, but let me get rid of this. Let me get rid of that. And that 618 held, so 2550 is key. We have, I think this support will be right here, which will be 2640. So let's write down that. 2550, 2640, and then resistance, let's figure that out. So I'm going to go from the high to the low here. That's a 38% retracement holding us. So that's 2675, 2710. So 2675, 2710. And we are going to keep silver in range. It's been in range. Bitcoin, 36.5, 30,000. You guys all know that. I still am bearish. Okay. Bias chart's finished. Now, guys, I'm going to be out. I'll be here for the daily roundup, and I'll be here. I'll be doing the analysis this evening, you know, that I normally do, and then I'm jumping on a plane. I just want you guys all to know, for those of you that are in the chat rooms, I'll be popping in. I'm going to try to do it on a daily basis, but look at the S&P, look at the Dow getting absolutely smashed right now. Holy shnikes. Telling you, it's waiting for me to leave. The market is
it's teasing you.
It is. It's like, go ahead. I double dog dare you to step on a plane, Blake. Is what it's telling me. But
I have an idea. Cancel your vacation, mate.
No, because then that's 4,400. No, but
Do it for us. Take one for the team.
No, I'm taking one for the team. I'm leaving. So you guys have volatility. That's what I'm doing. But nice. No, seriously, I'll be in the chat rooms. I'll pop in. You know, I have my mobile. I have a laptop with me. I don't know what my internet's going to be because my friends just bought a brand new house. They literally closed on Friday and had movers on Saturday, and we're coming today. So I have no idea what to expect. I mean, you know, they're in a new house in a new development in Bend, Oregon. So I have no idea I know what the house looks like, but I have no idea what to expect from internet and blah, blah, blah. So, and this couple and their family, they'll be taking us through the mountains and blah and all that type of stuff. So, but I usually get up before everybody, so I'll at least be popping in, just kind of checking in with everybody, saying hello, you know, and so just want to let you guys know I'll be within reach, and if I see anything that really garners my attention, I'll be popping into the chat room, just saying hello. But you guys have a great one. Steve's gonna you know, take care of you this week with the bias chart. I'm sure he's gonna be putting together a bias chart for you, and Stelios will be here, and you guys are gonna be in good hands. So so I'm excited. I haven't left since 2 years ago. It's been 2 years. I know.
Go have some fun, man.
I haven't left. Yeah, I literally haven't left our house in 2 years. So,
Yeah, that's crazy indeed.
Yes, it is. So
crazy and weird at the same time.
Yeah, crazy and weird.
But we live in weird times, right?
We do. We live in a COVID world. So anyway, all right, guys. Well, I'll see you on the daily roundup. Everybody, thank you so much. Here's, you guys got the bias chart. So I'll catch you guys a little bit later.
Thank you, mate.
Thanks, guys.
So the market's turning lower, dollar spiking. The only thing that's not following suit, or I mean, I don't know if we can say that, is yields. Yield is still going lower. 10-year US is what, 140 now?
Yeah, so that's not going to last long if we indeed
so,
see, a turn like this.
I wrote on the chat room earlier, I think I'm going to be shorting bonds and treasuries, but I'm tending more towards treasuries right now. So
I would do the same if I were you. I would definitely favor those.
Yeah.
Still, the 10-year yield, no real technical damage done here. I still see this as a corrective pullback. Nothing has changed in my technical viewpoint here.
Yeah. No, I agree. I think we have to go higher. The question is how much do we pull back from here?
Probably not much more, I think.
Yeah. And equities are taking a step down. Interestingly, we didn't talk about this on Facebook. You're getting things like, did you hear about Didi, that company that it's like an Uber in China? You hear about those?
No, I didn't.
They IPO'd some days ago, something like $4 or $5 billion, and
only.
The Chinese government
cheap bastards.
They basically forbid them from being on the iTunes or Play Store or whatever. So basically, they've IPO'd and nobody can download the app in China now. So you get governments.
In today's markets, that should definitely help double their capitalization, right? So if you can't use their services, I mean, that should definitely add something to the price.
Yeah, you have this, compared to, let's say, 10, 20 years ago, you have this huge unknown now. You have these things, you have governments intervening in everything. I mean, obviously, this is China, this is different, but it's...
is it?
It's different. It's so different than it used to be. Well, I don't know.
Yeah.
But, oil reversed from, I think Blake described it on FACE. I think it was it was an extension or a fib extension. I can't remember what it was, but basically it found some technical resistance and just got slammed. I haven't seen any headlines, so I don't assume anything's been done with OPEC or anything like that. It's just a technical move, I think. And obviously risk off, equities going lower, they're going to take everything.
If you remember, we had talked about this scenario multiple times. First of all, we said multiple times that crude oil is in danger of, reversing at any point in time, given where we are. Second of all, we had talked about the possibility of crude oil incrementally posting a new multi-year high and then reversing. And I do think that today we did incrementally post a new multi-year high. Let me pull the daily chart so we can confirm.
Steve, I'm stepping out. I'll be back. Okay, I'll be back soon.
Sure thing, mate. So, yes, there we go. Yeah, 77.07 was the multi-year high, and I think today we made it to 77.20 something. Let me see. 77.14 was the high. So we got an incrementally new high, and look at the daily candlestick so far today. It's an outside black candlestick. That's a very, very bearish candlestick, found at, the top of a trend. I mean, it's a very potent reversal candlestick. Of course, as always, I'm going to say that it's early on the day, although I have to say that it doesn't look at all good. I'm also going to say that we haven't broken through this trend line support yet, right? And keep in mind that we're currently testing support. 74.60, you can see it, produced two previous highs, acted as support 2nd of July. And who knows, it might act as support again. But I have to tell you that, this type of price action, we need a little bit more to the downside. And I think we will have seen the high. And when I say the high, I don't want to make it sound dramatic. I mean, it might be just a, few day to few week high, right? But I think, crude is in desperate need of a proper corrective move lower. And, given the price action we've seen so far today, new multi-year high and a very nice reversal so far lower, I like what I'm seeing so far. So let's see how we close on the day, but I do think that it already looks very, very interesting. So crude oil, definitely in my radar, it was anyhow. But you know something? In my opinion, since there is no concrete technical event yet in crude oil, there are other things that are currently at the epicenter of what's happening in the markets, especially now when we're talking about the FX markets. And my focus today is in these crosses: EUR-AUD, EUR-Kiwi, Pound-AUD, Pound-Kiwi. If you remember, I've been monitoring this for a very long period of time, saying how I'm confident that the rebound higher is corrective in nature. No need to analyze why. Just look at how much time it has taken to the market to slowly, in a choppy manner, retrace just 38.2% of just the last leg lower, not the whole move lower, right? Just the last leg lower. So, it took 92 trading days, right, for just a 4% rebound higher. So EUR-AUD accelerating lower, no technical break yet, right? Don't forget we have this channel. As long as this channel is holding, there is a case to be made that we might spend more time, but EUR-Kiwi has already broken down today, right? Same type of rebound, same amount of retracement, 38.2 of just the last leg lower, but we broke down. And I think there is a huge chance that EUR-Kiwi is just leading the rest of them, right? Pound-AUD, let's pull it up. Got rejected from this channel's trendline resistance. Still some distance away from a breakdown, but don't forget that, that is also due to the fact that the pound is doing somewhat better than the euro, right? And here is Pound-Kiwi. Now, clearly, EUR-Kiwi is the weakest, right? Not just because it broke down today, but if you look at it, it is the weakest. And since my bias is that these would break to the downside, and when these crosses start moving, they really start moving. So I'm extremely tempted to start building some positions here. I want to see how we close the day today, and I might start selling some of those. And my intention is not for them to be short-term trades, just to clarify, right? I don't intend to be in and out of this market, as generally this is not my style. So for me, with the exception of having a crude oil development as well, this is the first thing I'm looking at when I'm seeing the markets today. Okay, these crosses, especially the euro ones. Now, speaking about euro crosses, let's move to the euro pound, which is still coiling, right? We haven't had a look at it for some time because, as you see, still nothing has changed here, right? I think we should see some type of a move develop once we break out either to the upside or the downside. But even if we break to the upside, I more or less favor that would produce one more leg higher and then lower once again towards. I think the market wants to test this key area of support at 82.80, right? So I do think that this might act as a magnet. We should first test that before EUROPOUND decides what it wants to do. Now, having to do with equities, let's pull the S&P and the Nasdaq. Listen, here's the S&P and here's the Nasdaq. Now, having to do with the Nasdaq, technically speaking, if you are the type of person that wants to fade something that is showing no evidence yet that should be faded, right? So if you really, really want to be jumping the gun, I have to say that there is a very interesting confluence of resistances up here, and you can see it. It is the 161.8% extension of this pullback, right? And it is also this ascending wedge trend line resistance. Now, and add to that a third indication. We have this RSI divergence on the 4-hour chart, and we're testing trend line resistance at the 4-hour RSI, right? So, yeah, if you really want to be jumping the gun, which I don't suggest in anything, right? It would make sense. But, other than just a confluence of resistances, there is no other evidence. Even, we were talking before, like, equities seem to be pulling back. I mean, just let's put it in context, right? Equities, if we're talking about the S&P, which is the barometer for global risk, let's say, is 0.3% of the all-time high. So yeah, for me, this is no indication to fade this, right? If every time we saw a 0.3% move in one direction, we thought that this is a reversal signal, I think we would be losing money 10 times per day. So basically, yeah, you can always find potential for a reversal, but in my opinion, there is nothing that has happened so far. Now, admittedly, we see the dollar rebounding higher, we see crude oil breaking down. All of that is going to start perhaps weighing through correlations to equities somehow. But I don't think you should extrapolate in advance, building theory over theory of why we might see a reversal. Let's first see something like what we are seeing in crude oil today before we can even start making assumptions and measuring targets and all that about the potential reversal in risk assets. Having to do with metals, I want to start with palladium for a very good reason, because palladium probably has found the low, right? We had this little overthrow, but look at how palladium is slicing through higher levels. So, and now we've broken through this trend line resistance. So palladium, probably that nice confluence of supports over there, the 61.8, 200 DMA, horizontal support resistance area, nice psychological level, 2,500, right? Right, a nice rounded number. Might have done the trick, because we've already completely erased this very bearish daily candlestick. So whatever signal that produced, it's invalidated. So yeah, palladium seems to be on its way higher. Now, platinum, yeah, a rebound, but no breakout yet, right? Gold and silver, I'm not convinced yet. That we've seen the low. In essence, despite being extremely bullish, having to do with the medium to long term horizon, I'm still inclined to believe that they have one more leg lower. We'll find out soon, but I still think we'll see lower levels. So, what else? Cryptocurrencies. Nothing. Literally nothing. Nothing has really changed, if you ask me. Weekend ended up being, quite uneventful. We've seen volatility somewhat getting reduced. Here's Bitcoin, here's Ethereum. Ethereum has rebounded a little bit more, but in my opinion, most probably we're still in some kind of a bearish consolidation. So I still favor one more leg lower in cryptocurrencies, at least one more leg lower in cryptocurrencies. So nothing has really substantially changed there. Now, I think somebody even asked for natural gas. So natural gas, nice reversal today, along with crude oil. No big surprise here. As I've told you before, I wouldn't be surprised to see this is what we drew some time ago, right? I wouldn't be surprised to see natural gas retrace back to 340, 339. But I remain bullish. I mean, technically speaking, we've had nice bullish developments here, so that hasn't changed. Have a good break. Look at oil, guys. Oh, yeah, we just had a look at oil. So, yeah, I agree with you. It's interesting. It's important. Let's see how we close the day, as I said. Wishes for Blake to have a good vacation. Gorkim says long USD MXN. I'm not in agreement with you. I wouldn't be long the USD MXN. I can tell you that much. I'm not saying that the USD MXN can't rebound from here. It actually can, right? We're still holding above the 1955, more or less, 1954.80, whatever it is, low. There is a chance that we're going to rebound from there. The question is not just about are we going to rebound higher, which, the chart doesn't look good. I have to tell you that. So we might not. The chart doesn't look good though. But my biggest problem with being long USD MXN is the question, why? I mean, why choose to be long the US dollar against Mexican peso when there are many other currencies that seem to be much weaker than the Mexican peso? Right. So that's my biggest question. For example, if we just want to stick to the commodity currency universe, so not even change category of currencies, let's say, right? Look at USD MXN and USD CAD. Which of the two looks more bullish to you? Look USD MXN and USD NOK. Which of the two looks more bullish to you? Look USD MXN and USD SEK. Which of the two looks more bullish to you? So why the USD MXN is my question. I think it's a very bad choice. It might rebound higher, but there are much better candidates out there to be long the US dollar if that's what you want to do. And many more currencies. Just gave you like three, also making a segue to showing that these three seem to have produced, all of them, the same type of formation, which is a symmetrical triangle after a rather strong move higher. That tells me that most probably there is one more leg higher missing. So I favor a breakout to the upside from the symmetrical triangles for at least one more leg to the upside before we can actually find the high. Okay. So basically, I wouldn't be long the USD MXN. If I wanted to be long, if I wanted to express USD bullishness, I would choose something else, Gorkim. My 50 cents, of course. You are the master of yourself and of your trading account, right? Just giving you some friendly feedback. Blake said EM started to break below the trend line, which will indicate that the USD MXN should go higher. That's why I said that, Steve. Oh, yeah. Okay, if that was Blake's thesis, I disagree with Blake for that reason, right? Now, let me be very, very clear. Disagreeing with something about a specific thesis doesn't mean no matter who that is it you, is it Blake or whoever, doesn't really mean something, right? I mean, there are many times that we've disagreed with Blake and he has been right? There are other times that we've disagreed and I have been right. I'm just giving you my own perspective. Most of the times, we agree with the rest of the guys. You see this, right? Sometimes we have a different viewpoint in the market, and that's absolutely healthy. You know, it would be a disservice to you to act like all the time we all agree in something. That would definitely be a sign of either of two things. One, we're not separate people. We just have like all of us are following one person's opinion. Let's say Blake's opinion, my opinion, Stelios's opinion, doesn't really matter, which would be bad, right? Because we are offering a service to you that supposedly comes from different people combining their opinions about the markets. If all of the people were actually taking their cues from one single person, then, you know, if we were 10 or 1, it would be one and the same. And that's not the case, right? And, you know, one of the things that ForexAnalytix does is that it gives you several types of analysis and several viewpoints. And whenever these viewpoints agree on something, that's usually a signal that the chances of that happening are very, very high, right? Because when people that have been in the markets for many years are experienced and then have proved that they can make money trading, look at the markets in the same viewpoint, you know, usually that means something. Usually, you know, there's no absolutes in the market. So in this case, I disagree. I wouldn't be choosing to buy dollar against the Mexican peso. I would prefer, it might work, but I think there are trades out there being long the USD that might perform better than the USD MXN. SMH, let's see, and XRT and UPS, let's see, one by one. SMH. SMH has probably broken out. I mean, it has produced higher highs. It has broken out of a symmetrical triangle, and it seems to even be forming some kind of a little bull flag. So higher towards where? Let's see. 270 in essence is the first upside target, the 127% extension of the symmetrical triangles range. So 270 next upside resistance, next upside target, more or less in this case. Steve, CAD yen looks overdone. Yen might be undervalued. Thought. Let's see. And then we're going to switch back to the equities. CAD yen. This is what I'm monitoring here in the CAD yen on the daily chart. The potential of this being a corrective move lower, right? It is overdone for the time being. And if I had to be short or long here, I would definitely be short, despite being in an uptrend for quite some time, right? But as you said, it is overdone. RSI says so. We are in some kind of a corrective move lower, which I think most likely than not has more to unfold. I would be looking towards this channel trend line support for the next downside target. So I agree with everything you said, Michael. XRT. Let's look at XRT. Whoop, wrong chart. XRT. Here, there we go. Yeah, you should still be careful with XRT. You see why. There we go. Both scenarios remain on the table. But I have to tell you that it's a really valid scenario to see a breakdown and a move back to 75 without seeing a breakout. Alternatively, if we see a breakout, I think the next move higher is going to be terminal. It's going to be the last move higher before we see a retracement back to 74. So bottom line, you can play the breakout. If we do break above 99.25, you can buy it short term for an extension higher, but be really careful, because if we break through this trend line support, I think we're headed to 75, so we're headed much lower. It's still coiling though, so in my opinion, you should be doing nothing as long as we're in the middle of this ascending triangle, right? So no real developments yet here. UPS. Yeah, at resistance. From a risk reward perspective, you can say you can be short here and expect more consolidation before we break out, and it might actually work. But if we break out from this trend line resistance, I think we're headed higher, right? So currently at a pivot, in essence, right? Currently at a pivot. RSI, I would say RSI would make me tend to believe that there's going to be more consolidation before we break out, just by judging RSI at the moment, right? IWM, yeah, the Russell, okay. The Russell, here is the Russell. There it is. Nothing changed. There you go. Nothing changed. We're in this flat top triangle. It has a very decent chance for this to be a bullish consolidation, but we do need to break above 234.50 to trigger that. Until that happens, you have to respect this, right? The possibility of seeing another leg lower. Now, if for some reason we break through this trend line support, everything changes. We should then start looking for a much deeper corrective move. But until that happens, you should favor the bullish scenario after this consolidation is over, whenever that is. AMRS. Yeah, it still looks good. It still looks good. Not fantastic, because momentum is really not that amazing. But look at this. At some point we drew this, and it has been working nicely, right? There is some momentum loss, admittedly. But there is a good chance we have found the low. So, we might just see some type of a pullback and then higher. DDD, triple D. Look at this. Worked out perfectly, huh? From the last time we had a look at it. There you go. Nothing to draw here. We drew it all some time ago. Made it perfectly to this trend line support, to this support area. And for the time being, we seem to be having some kind of reaction from there. As long as that's the case, keep looking higher. If this horizontal support area holds, you should remain bullish. GRU. Still coiling. But be careful, because we are really close to a breakdown. Of course, we were very close to a break higher as well, right? Now, to be fair and honest, yeah, I think I would pay more attention to the blue trend line than the red one, if I am to be honest with you. I wouldn't be turning bearish as long as this blue trend line holds. We might be just within another bull flag here. Also, 366 key support area. There you go. Steve, what does, in your opinion, keep the Nasdaq bid while the rest of the indices are losing ground? Is it the 10 and 30-year yield still going down? Yes, listen, that's a big part of it. Yes, that is a big part of it. We've turned back to the trade we had. The market doesn't really care. It wants to chase growth once again. Yields do point to that direction in the short term. That is why, though, I would be extremely careful with chasing this trade. Not only because it's extremely overdone, but I don't think yields have much more to go to the downside before they can resume the upside, right? So I have to tell you that the market is wrong again to chase here. I think it's going to prove to be a very, very bad idea, chasing the Nasdaq overblown stocks at current valuations, with the index looking as overdone as it is, and with everything that's looming. Yeah, so in my opinion, just ignore what the rest are doing and be more cautious. You know, the general guideline, you know, be greedy when others are fearful and be fearful when others are greedy. As a general rule, it tends to work. mRNA, that's Moderna, right? Yeah, it hasn't done anything wrong yet. Still looks good. A little bit of a pullback, but you know, we have a target 274 from this bull flag. So until proven otherwise, look towards 274. There is also some RSI divergence, but keep in mind that these divergences can sustain themselves for quite some time before they play out, right? Okay, guys, girls. Blake is going to do the daily roundup today, so join him for that. And, you know, we're going to be doing the rest of the webinars for a few days together with Stelios and I. Okay, so see you tomorrow. Bye-bye.